The first type of transaction we're going to process is a purchase return. So that's when our business returns goods to a supplier that we've previously purchased. So before we can do that, let's figure out the transaction that it is that we're returning, the impact it would have had on our general ledger. So let's say on the 17th of January, we are Alston Wick Electricals. So we can see here that this is our business in the middle here. And we're going to be buying goods from a supplier called Wholesale Trading here. So we bought $170 of goods and we charged GST, and that is going to be on credit. So for us, this is stock or inventory. So the double entry is required. We're going to have the stock control ledger go up, got more inventory. GST, we're being charged it, so that'll decrease our liability. And then we haven't paid for this, so rather than a credit being taken out of the bank ledger, we're going to increase creditors control, and therefore we'll need to create a creditor subsidiary entry as above. So we've got one matching credit to go with the two debits there. So let's say these goods were returned. They've been returned by us to Wholesale Trading. So what that means is that is not a sales return from our perspective, but that is going to be a purchase return. Well, what we're going to need to do is undo the transaction that you can see on the screen. So we've got the stock, we will charge GST, we owe the creditor money, but now that the goods have been returned, we need to undo all of these things. So the first thing we'll do is reduce the amount of stock we've got. We don't have that inventory anymore, it's been sent back. The GST, we are claiming that we've been charged $17, which was true, but we can't claim that anymore because we've now returned the goods. So we'll need to offset that with a credit like so. Looking at the creditors accounts, well, we can see that it shows that we owe this business called Wholesale Trading $187. Well, we don't owe them anything now because we've returned some goods and been given a credit, so we better make a debit in both of those. So we learned in the previous video that we do all this in the general journal. So just to go through what that looks like as entries here, we've got the date, so the actual date. We've got the creditors control account being debited, and therefore an entry needs to be made in the subsidiary ledger, so whatever the name of the business is, in this case Wholesale Trading. And then we offset that with a credit into stock control and a credit into GST clearing. Now the question might ask for a narration, so let's have a look at a very thorough narration. So we've got return of 3 jackets to the supplier due to a fault, credit note 14. Let's have a look at what makes a good narration. What we want to do is we want to have 2 out of the following 3 things. We want to have the type of stock being returned, e.g. a jacket or say a television. We want to have the number of units that have been returned, 1, 3 or 10, however many it is. The reason why it's been returned, in this case it's faulty, maybe it was the wrong type, maybe it was damaged. What we want to do though is have at least 2 out of those 3 things in a description, and that'll give it a level of detail that's going to get a mark. The one thing we do need that's not negotiable is we need that credit note number in there. So if we have that plus 2 out of the other 3 things, we're going to get full marks for our narration.